Hey everybody, what's up? We are back for another stock analysis. Today we will be looking at Clover Health. So they basically do life and health insurance as far as I know. Um Honestly, pretty small company. Um they've had a fairly good year though. They're up a ton, but market cap is right around 2 billion and yeah, so looks pretty okay. We're going to get into them, go through all the financials, and then everything else. So make sure to subscribe if you haven't, and let's get into Clover Health. Okay, so getting into Clover Health, you could see primarily focusing on Medicare Advantage plans, market cap at 2.3 billion right here. Long-term growth rate is massively negative, which is not great, but we'll get into more of that later. So target price is right about in line currently with the actual price. The actual price is a little bit higher. Getting into their growth summary, little bit of some funky numbers here. Apparently, the 3-year estimate is 2,486% sales growth. So, if that happens, holy crap, but it would be very surprising to see that unless their sales are like $1 right now and they go up to $24. I can't imagine that being realistic, but if that's the estimate, that's the estimate. So, I'm going to be speeding through this one a little bit because I already recorded 2 videos today and I am ready to not be. So, looking at, let's go into fiscal years first and we can see some general information. So, just to note, this is only 3 quarters of 2024, so there is still another full quarter to record for here, and it does look like they will beat their sales from the year before, just based on the current numbers. But some things to note, they are not very profitable at all. Operating income has never been positive. And just seeing that, I'm going to go back to the quarters now just to see. So, does look like they actually had a profit in 1 quarter of 2024 so far. Also, their operating income is very close to being positive. Um, there are some extra things because it is an insurance company. They have losses, claims, and reserves. So, one thing with an insurance company, especially a newer one like Clover, which if we just go here, we can see when they went positive was in 2020. So, kind of a rough time to go positive, but it does look like they kind of found their footing and now they are really expanding in terms of their stock value. Just a couple months ago, they were at 68 cents a share, and now they're honestly today it looks like they're going to hit $5 a share, which is kind of crazy, but I wouldn't be surprised to see that just happening today. But anyway, going back to the financials, overall, it looks like they are having a pretty big comeback. A lot of stuff happening. Shares are, kind of increasing over the years, or I should say over the quarters, but overall, not a crazy amount. I mean, they are increasing totally, but not an insane amount. Looking into the balance sheet now, they have a decent amount of cash. This should be in millions, which it is. So total assets came down a lot since last year. And actually in 2022, it looks like they had 2 billion in assets. Now they're at 650 million. So it looks like a lot of that is really just from other other assets. It looks like came down a lot. They seems like they sold off most of them and now they have very little, as well as just tangibles in general. So overall, not anything like too concerning. It doesn't define exactly what other assets are, but it seems like they really didn't need them based on their sales. So it's most likely just a cost cutting strategy within the company. And then obviously, insurance company has insurance liabilities. So they have plenty of cash to cover all of that. And also, it looks like it decreased quarter over quarter for the past 2 quarters, which honestly, I'm not 100% sure if that's a good thing or bad thing. Now, obviously, having less liability is good, but for the insurance standpoint of it, I don't know if that's like there's less claims or something like that. But overall, I don't think that is too bad. Moving into the cash flows now, we can see operating cash flow, 3 quarters of positivity, a little bit mixed before that, but 3 quarters in a row is pretty good. Investing activities, you could see, is fairly mixed. They have been, of course, selling off a lot of those investments we talked about earlier, which is perfectly fine just based on where their sales are. That is totally fine. And then financing activity, they have been repurchasing stock every single quarter for the past 7 quarters here, which is fantastic. That is very good. Good to see they're not diluting anymore. And that definitely has helped with their kind of stock price rebound here, which might not hit $5 today. It looks like they just had a little bit of a drop back down, but wouldn't shock me to see $5. Actually, looking at the time now, it is 3:40. Not going to happen, but very soon it will be above $5. I wouldn't doubt it at all. Free cash flow has been positive for 3 quarters straight now and increasingly positive, which is fantastic. Overall, the company looks really solid, just with everything I've seen. Going into the segment history, we could see 2023 apparently sucked for them, but that does not include 2024 yet, which has been excellent so far from what I have seen. Looking at the ratios, we'll go into the quarters here to get a better view of recently. And okay, so this is insurance focused, which I am not very experienced with. Expense ratio. I don't know if lower is good or not. However, just based on the way the company is performing, I'm going to guess that the expense ratio being lower is a good thing and assume that they're doing excellent in this department. That's what I'm going to say here. Other than that, I'm going to go with return on net income, return on assets. Looks like it is turning towards profitability, which is good. Return on total capital is approaching that 0 point, which again is also good. Asset turnover is increasing, at least for the past 3 quarters it has been, which is always a positive thing. And long-term debt to total equity is basically nothing. They do have a whole bunch of other stuff here. I'm really not going to get into too much because, again, there are specific companies like banks and insurance companies like this where the financial statements are different, and that is not exactly something I am specialized in or very educated on just yet. But going back to school in a couple days, so we'll see what happens there. But overall, everything looks very good. Everything that I've seen looks excellent. The company's stock price shows that, and overall, very good. Now, getting into some recent news, it does look like, okay, so not too much here. Although, one thing to note right off the bat, which this is very recent news from about 2 weeks ago, 27% growth of its Medicare Advantage plan membership during the most recent annual election period, which is just when people can sign up for it. That is actually really good. That's fantastic for the company. But let's go into their last earnings report and just kind of see. So it looks like this might have some data on it. So, okay, fiscal year guidance. Revenue is slightly under for quarter 3. Net income did beat fairly largely, though. An estimate of 20 million loss compared to just 8.8 million in which was realized. Adjusted EBITDA looks like they increased their guidance, so that is definitely something that drove their stock growth recently. It looks like their revenue is going to come in just about in line with estimates, though, actually a little bit under, but EBITDA is a little bit more important than just overall revenue. And then there are some management comments here. So execution during quarter 3 drove meaningful profitability, increased full year profitability guidance, we believe. Strong financial profile and momentum combined with strong performance sets us up well to invest in and return to membership growth in 2025. So it looks like 2025 is going to be a fantastic year for this company, just based on what I'm seeing. Looks very good. I wouldn't personally consider investing in this just because of how much higher it is than it was right now. However, one thing to note is 100,000 customers right now, all paying them most likely monthly. A ton of revenue growth. It seems, at least, it seems like they're going to have a ton of revenue growth, and overall just looks like they're going to have a fantastic year for the company as a whole. So looks pretty good. Everything looks pretty good here. No bad things that I've seen so far. So that's all I've got. I'm definitely going to look into this company again towards this next earnings report, just because it looks very, very interesting. But that's all I got. So thanks for watching. Make sure to subscribe if you haven't, and I will see everybody in the next video.